Hello, and welcome to myfinancesteacher.org. In this video, I want to have a look at a number of markets. So let's strap in as we go through the general stock market, gold miners, as well as silver and silver miners. So starting with S&P 500, on Thursday and Friday last week, we saw a couple of interesting, nice green candles. Although it doesn't necessarily guarantee that a new uptrend is starting right here, I think the chances for this new uptrend are pretty good, and let me tell you the reasons why I think so. So firstly is the duration of the normal short-term daily cycle. Usually, as I mentioned many times, these cycles for the general stock market last for about a couple of months. The recent low on Thursday took place 52 days after the beginning of the cycle. It's close enough to 2 months. So there is a good chance, I think, that we are going to start a second short-term daily cycle within the ongoing intermediate cycle in S&P 500. Of course, there is also a chance that S&P 500 continues down from here for another several days. Even 1 or 2 weeks are possible. Give us a proper daily cycle a little bit later before starting the next uptrend into the second short-term daily cycle. That is also possible. And that is why, of course, we are going to use stop losses to make sure we limit the potential losses if we are mistaken about these cycles at the moment. And that will give us a chance to enter at a better, lower price later on. But for now, I think we have a relatively good opportunity to enter on the long side once the markets open on Monday. By the way, the time of this video recording is before markets open in the US on Monday. This video is going to be posted in time immediately after I finish recording it at my website myfinancesteacher.org. We are very likely to enter into some trades early Monday, and this video will also be publicly posted on YouTube at least 1 or 2 days after we've entered into profitable trades. So if you are watching this on YouTube and if you want to get timely updates on a number of assets, that's the general stock markets, precious metals related assets, energy related assets, and cryptocurrencies, make sure to join us at myfinancesteacher.org. Besides my analysis, I have a business partner who is writing these newsletters, and the newsletters are about his experience of investing over multiple decades. If you scroll down to categories and click on newsletters, that's where you'll be able to see all of those newsletters. Otherwise, on the homepage, you can see all the posts chronologically in the reverse order. So going back to S&P 500, if on Monday morning I don't see any drastically bad news in relation to the general stock market, I will make a post on entering into the stock market with my personal portfolio, and our stop loss is going to be this recent low on Thursday. Let's say at about 27.70. I think there is a good chance, as I mentioned, that we have seen the low on Thursday based on the duration of this cycle, and what I haven't mentioned is the RSI. I'm looking at 10-day RSI right now because the movements in the 14-day RSI haven't been as noticeable, but the 10-day RSI has recently reached a low of 47, just under 50. Since the ongoing intermediate cycle is still relatively young, I think it's low enough for the 10-day RSI to try another trade in the general stock market. So our stop loss is going to be at about 27.70, and as long as the markets stay in good shape on Monday morning, and looking at the futures are currently higher than the S&P spot. So at the moment everything is okay with the markets. In either case, if we don't see drastically bad performance on Monday morning, we're going to enter, and our target for the second daily cycle is going to be to break above this 200-day moving average and possibly reach a number of the next level resistance zones. First would be based on these early March highs. That's at about 31.30, and if that resistance level is broken, the next resistance is going to be based on this late January low. That's somewhere at about 32.20. So based on the current price of S&P, if we only reach the first target at about 31.30, that would be a risk reward of close to 2.4. It's not really amazing, but I think it's good enough for me to try this trade. So stay tuned until the market opened today. Next, let's have a look at gold. Over the last couple of days, we see gold is finally breaking out of this triangle that it's been over the last month or so. In a few of previous videos, we mentioned we were expecting a break on the upside from this triangle, and it is happening. Some of you might notice that we're already above the upper range of the Bollinger Bands. Thus, gold price looks a little bit risky at the moment. However, in my personal allocations, I'm already 95% allocated. So at the moment, I'm not very much worried that gold is poking above the upper range of the Bollinger Bands. There are a couple of factors that give me the confidence to hold the 95% allocation. Firstly, the previous low on the 1st of May was about 1.5 months after the start of that cycle, so it's within the usual range of the duration for that cycle. Meaning that it is likely that we did saw the end of the cycle on the 1st of May and we are now continuing into the rally of the second cycle and the continuation of this longer-term intermediate cycle. If we are in the second short-term daily cycle, then so far it's only been going on for 17 days, which means it's young enough and we might have at least another couple of weeks for an uptrend before we're likely to see a decline in gold price. Although RSI is already very close to overbought levels, remember this is only a 10-day RSI. Switching to 14-day RSI shows that RSI still has some room to move up before it's deeper into overbought territory. And lastly, talking of the triangle, this symmetrical triangle has a height of, say, around $100, and the breakout happened somewhere at about 1720, something like that. So $100 above that should actually bring us somewhere close to 1820. So I think there is a good chance that within the ongoing rally in gold, we might even actually break that 1800. On the other hand, though, 1800 is a nice round number, so that might prove to be a strong enough resistance zone that the rally might only reach 1800 without significantly breaking above that. So my targets for now is either 1800 or 1820. If you'd like to see gold break above 1800 over the next couple of weeks, make sure to hit that like button. Next, looking at GDX, it's also looking pretty good. 10-day RSI is only now starting to enter into overbought territory, but remember this is a short-term RSI. Over the last couple of weeks, GDX retested the breakout of the long-term resistance zone at $32. It's now bouncing up from that resistance, which has turned into support. We already broke our nearest resistance at about $36, and our next resistance zone from mid-2012 is somewhere at about $39. So as gold continues up for the next couple of weeks at least, I think GDX has a pretty good chance to come close to $39 to maybe even $40. How nice would that be? And looking at silver, finally, with gold making the second push up since March this year, silver is finally starting to really catch up with gold. It broke above the 200-day moving average on Friday, although gold has already been far above its 200-day moving average for a while. So I think as opposed to gold over the next couple of weeks, there might be a really interesting opportunity in silver, as it usually catches up later in the rally once people realize that the ongoing rally might actually be a real deal and once they feel more confident to put more money into a volatile asset such as silver. So silver as well as silver miners, this is SILJ, junior silver miners, I think are going to perform very well over the next couple of weeks. Going back to silver, forgot to mention about our targets. Our first resistance zone is based on these late January, early February and early March lows and highs at about $17.50. But at the moment, silver is already extremely close to those levels, so I think those are going to be smashed very easily by silver. After that, our next resistance is based on early January and late March highs, which is actually somewhere between $18.8 and $19 on silver. And that is about 8.5% above current price. How's that for a nice move in silver? And along with silver, I think silver miners are going to perform very well as well. By the way, recently, that's on the 12th of May, I posted to the members at myfinanceteacher.org that in my personal trade, I did have a limit order on junior silver miners to buy if the price reaches $10.1. Reaching that level would confirm that the next rally is starting. Since then, price has actually reached $10.7, which is actually nearly 6% higher for entry price. And that's just in one day. So again, if you want to receive timely updates on our trades, as well as access to the newsletter from my business partner, make sure to join us at myfinancesteacher.org. So in summary, precious metals markets look very good at the moment. And on the general stock markets, we are likely to try a trade if everything is more or less okay on Monday morning. Stay tuned for that trade. Have a good time until then. Subscribe to the YouTube channel if you haven't, and good luck in your trades.